So, Bitcoin mining difficulty just hit an all-time high of 127.6 trillion, which is kind of a big deal for the network. It's all about keeping the mining process on track, right?
Absolutely. Exactly. It's like the built-in mechanism that balances creation and mining speed.
Right. The idea is to prevent Bitcoin from being mined too quickly. The protocol's built-in check ensures block times stay around 10 minutes, and if more power comes online, the difficulty rises to counteract that.
Yeah, it's like a thermostat adjusting as compute power changes, isn't it?
Mm-hmm. Exactly. And get this, the current average block time is about 10 minutes and 20 seconds, so it's staying pretty close to its target.
Now, what's interesting here is that even though we've hit a record high, the projection is that the next difficulty adjustment on August 9th might see a drop of around 3%, down to roughly 123.7 trillion.
Right, right. Yep. It's almost like a seesaw, rising difficulty when computing power increases, dipping when there's a drop. In June, the difficulty actually fell sharply, dropping down to around 116.9 trillion during the late June and early July period. And then it started trending upward again later in July.
That kind of makes sense because miners are always adapting to market forces and power changes.
Exactly. And this interplay between mining difficulty and network hash rate is crucial. It's not just about security, it impacts miner profitability too. The steady difficulty helps ensure Bitcoin maintains its intended scarcity, kind of
Yeah,
like how
yeah.
gold has a limited supply.
Speaking of scarcity, isn't there that concept of the stock to flow ratio that's been mentioned a lot in Bitcoin circles?
Absolutely. The stock to flow ratio measures the amount of an asset available versus how much is produced. Bitcoin's ratio is really impressive because 94% of its total supply is already mined and circulating. It's a big part of why people say Bitcoin is twice as scarce as gold.
Really cool. That's fascinating. Comparing Bitcoin to traditional assets like gold and silver really highlights its unique nature.
Right? And the comparison is quite interesting. Gold has like a stock to flow ratio around 60, whereas Bitcoin apparently clocks in at about 120, according to Plan B. It's like having a super limited edition asset in a market otherwise flooded with supply.
But don't you think that a drop in difficulty, like the projected 3% decrease, might in a way benefit miners by lowering the competition a bit?
Well, sure, on the surface, it might seem beneficial to lower difficulty because it could boost profitability in the short term, but it's also about the overall balance. The difficulty adjustment, you see, serves to prevent overproduction and potential price instability by regulating how quickly new Bitcoins are minted.
Yeah, I get that. So it's almost like a safeguard against flooding the market with new coins, right?
Precisely. It's like how too much water can flood a garden, except with Bitcoins, overmining can cause sharp price swings if supply suddenly accelerates. The adjustment mechanism ensures a steady pace.
And that steadiness is key to maintaining Bitcoin's price resilience, especially when we talk about its high stock to flow ratio ensuring price inelasticity.
Exactly. The protocol is built so that as more computing power is added, the difficulty adjusts upward to keep block creation smooth, and vice versa. It really mirrors the dynamics we see with traditional assets like gold, but with an algorithmic twist.
Indeed. What's really fascinating is how the network self regulates regardless of the external conditions, like the varying market sentiment or changes in mining hardware efficiency.
Absolutely, it's like um, nature's way of regulating its own ecosystem. And it's this balance between the hash rate volumes and difficulty that upholds Bitcoin's network integrity. Otherwise, we'd risk a scenario where too many coins get dumped too quickly, which could, well, trigger a price collapse.
Right. That stability is what gives Bitcoin its robustness over time. Though I still wonder if there might be external factors that could disrupt this balance.
That's a fair challenge. Some might argue that a significant drop in, say, mining participation could lead to too rapid an adjustment, affecting miner profits. But overall, the design has proven resilient. It's like it's been tested against market cycles
Very
over the
true.
years.
And even if there's a dip in difficulty, it's all part of the natural cycle within the crypto ecosystem.
Exactly. The uptrend followed by a short term reduction is just part of the broader feedback loop. It's interesting how these metrics, like mining difficulty and the hash rate, give us a window into the overall health of the Bitcoin network.
Yep. And it really shows how closely intertwined miner behavior and network security are. One small shift can reflect or trigger larger changes in profitability and transaction processing.
Right. And that's why analysts keep a keen eye on these numbers. The projected drop in August, after hitting the all time high, is just another sign of the network's dynamism. Always adapting, never
Absolutely.
static.
Adaptation is key. It's kind of fascinating when you think about it this way. Bitcoin isn't just digital money, it's a whole ecosystem with built in checks and balances.
Exactly. And while these fluctuations might seem unpredictable at times, they play an essential role in maintaining Bitcoin's scarcity and value proposition over the long term.
Yeah, got it. Thanks for breaking that down. It really highlights the tech and economic forces at play together.
Anytime. It's truly a fascinating interplay of technology, economics, and even a bit of, market psychology.
Definitely a wild ride in the crypto space. Thanks for the insights.